Welcome to TraderMerlin, everybody. Sorry for that one. Thank you so much, Thomasina and Judy, for giving me the no sound. A, I've got no sound. B, I look like a smoldering burnt tomato. Just so you know, I moved the office around upstairs just to make it a little bit better for myself, but I forgot to do the camera settings, and God, what an awful looking picture today. So just another case of the Mondays. I feel like Garfield out here. Anyway, happy Monday, everybody. Sorry for the lack of sound. We got it. There you go. You got sound now. It should be popping. Your sound should be popping. I unmuted. Yes, there we go. There we go. Hey. All right, I'm going to keep my video off pretty much most of the day because I look absolutely horrible, and I will try to fix my video tonight when the sun goes down and it becomes cooler up here. I'm going to do a lot of question and answer today. The reason I want to do Q&A is I have a bunch of questions that came in on Thursday, Friday, and over the weekend, especially from Ed up in San Jose. You sent me a question, which he rarely sends me questions, more comments, and I forgot to upload the videos or the podcast, but Ed sent in a question, which Ed, I will make sure I get to that one today. So let me start with going over the top 7 markets. I'm probably not going to show much of my face be on camera today. It's going to be no tomato Merlin, right? KNS? Nope. Don't want to see me. We're going to do no Merlin on camera today. Let's start at the bottom, work our way up. So NASDAQ, we talked about coming into this overhead supply level. Basically, it felt almost like level on level, but there is some distance between these two levels. We broke through that one last week, and now rushing towards this overhead supply level right around 13.5. Today's tail rallied up very close, and I would argue it actually kind of hit if you're using proximal distal lines, as Online Trading Academy teaches. I would say that there was a nice rally right up into that zone. 13,419 was the high today, and then we basically sold off most of the remainder of that session, finishing the day down 0.25 for the NASDAQ 100. S&P and the other indexes all fared better, but what's noteworthy here is 4 days in a row of just traversing sideways through that yellow box. That's not good for anybody who's bearish. That would be me because I have a short position on the S&P, and I was expecting it to sell off a little bit more. It did not today. So again, I have to be very careful about my stop loss in this situation because anything above that yellow box would lead me to believe we're going to see higher prices, and therefore I have to make sure I do not take a big loss on this one. So I will keep my stop loss right above that yellow box. Now, that sideways action, it still had a higher high today, but came back, and ultimately the last 3 sessions have been almost identical looking candles, just flat with topping and bottoming tails and ending right about the same. Dojis for 3 days in a row for the S&P. NASDAQ, we went to S&P. Now we'll look at the Dow, which tiptoed back into that overhead supply level, although I don't really trade the Dow, just not enough volatility for me with the futures product, so typically it can be the S&P and the NASDAQ in my book. Moving on up, we've got gold. Here is a 0.83% move up in gold, but it is also rather choppy. That yellow box you see here is not intended to be a supply zone. It is just kind of a range-bound area that we found. I should probably delete that one, but right now it's actually respecting that initial breakdown that happened back in July and now retesting it. So we'll see if we can get some momentum here to the upside on gold. All in all, 0.82% gain to 1,805 as we speak right now. All right, podium time. Russell 2000 was up 1.07%. This was a tough one for me today because I had my finger on the trigger, and I'm like, okay, I almost sold some futures on this one just because we came into that area of supply. It's been a double tap, as you can see, kind of formed that supply zone back in April of this year, came back and visited in May, and now all of a sudden we're back into it. So my gut was telling me we'd have a little bit of a pullback here, but I feel like I got too much exposure on right now, so I don't want to expand more to the short side in a market that's looking very strong. So I decided not to pull the trigger short on the Russell today, so right now I'm just short S&P and NASDAQ. Waiting either to be stopped out or have a nice sell-off here and capitalize and make some more gains. What do we have? 1943 is what you close out for the Russell. Crude oil, finally a little bit of a bounce. I'm sure those of you who were bullish on this one are happy to see a little bit of a pop. As you notice, we look over here, we talked about it breaking that demand zone right around 93.60 and looking for new ones. And again, I don't see anything really strong until potentially getting down around 65. Now, I don't think crude oil is going to get to 65. If that does happen, the Fed's going to have a lot of ammunition to say that inflation is over, we're good, yay. But at this point, if you are trading crude oil, to me, it looks like go long until we get back to 93.60. Once it gets that level, might expect it to sell back off and have a little bit of a pullback here because the trend starting since June has been pretty much nothing but down. All right, last on the list, the big move, Bitcoin. Now, it's up 5%, but it's still really just traversing sideways, right? I had drawn this initial, the lower yellow box here, identifying a range, expecting it to drop below that simply because that's what the trend had been doing. Well, not only are we not trending down, it feels like we're actually trending up. Somebody texted me over the weekend, says, hey, do you feel like we're making an ascending triangle? And I said, you know, it actually does feel that way. If I draw trend lines through the bottom here, especially over the last 3 dips, you can see we've got that level there, and I'll move this one up just for fun, so I'll draw another one. And there you've got really an ascending triangle pattern forming, which is great. And it's a very bullish sign. That would imply that we're going to see a nice pop to the upside, and that could actually bring us back to that 29,000 mark, which I mentioned for me would be the next major target to close that gap that we saw back in, what was that, May? Let me get the dates right. June 10th to 11th on that rollover. We had a gap down. You could see it close that gap if we get that breakout here. So all in all, looking good in the crypto space. On my watch list here, I will show you. Let me just bring this list up. I'm going to scroll through it on the right-hand side of your screen here. Notice lots of big gainers. Celsius actually doing rather well today at 14%, but most of them in the green. I've got 1, 2, 3, 4, 5 on my list that are in the negative portion, and most of those are pump and dumps at this point. Songbird, UST, I mean, these are trash ones. Elgarand on there is okay, but not that many negative stuff in the crypto space. All right, I am not going to show my video just because it's that bad, so I will just kind of stay off camera and go to listener questions here. Let me real quickly see. It's Monday. I did go to the beach, but I would never look that bad. Here's the cure. Go to YouTube, search Monday Morning Must Knows 2020 and get your fix. Hey, I like the Monday Morning Must Knows. I think it's a pretty good one to do. Monday Morning Must Knows, it's been a lot of fun, especially, I incorporated some of what Don Dawson talked about. As you guys might remember, this Friday we have the WASD report coming out, and I'm curious to see how that impacts the markets. How these commodities start bouncing all around on Friday based off that report. So I'm looking forward to that. Let's start things off with Tom, not Tom Barr. This was a different Tom, but Tom asked thoughts on the Tesla split. So I'm going to bring up Tesla over here, TSLA. As you guys know, last week on Thursday they announced a 3-for-1 split. I just think I look terrible. I don't want anybody making fun of me, Tom. That's all. They announced a 3-for-1 split on Tesla, and that would happen. I believe the exercise date would be the 24th. So one really cool thing about TradingView here, this is unique. There's only a couple platforms that actually do this. But you see at the bottom, there's like these E's and S's. Well, the E's represent earnings. The S represents split. So the last split they did was back on August 31st. That was a 5-for-1 split in Tesla. And now you can see that the writing literally is on the chart that says the split will happen on August 25th. So it's whoever holds it at the end of day on the 24th will receive a 3-for-1 split. Now, as far as what do I think about it, look, I really think that there is a Joe, you're going to get blocked, buddy. You look red and orange. I thought you were the former president. That's good. That's it. Blocking that guy. There is a historical pattern that I've experienced over the years with stock splits, which is normally when they make the announcement, there's a run, and there's a run right up until the actual split date. So, for example, here you can see Tesla. I forgot exactly when they did the initial announcement. That was either August 11th or probably back here on like June 30th, right? Now, if it was right here on August 11th, notice they make the announcement, and then typically it will just run right up into the split. And you can see here that, well, in fact, Tesla did. It just kept rallying, and all of a sudden, as soon as it split, it collapsed. Amazon was the exception to this one. Let's go look at Amazon's recent split. Right, so you can see it did have a run-up to the split, and then, I guess it's not the exception. It had a run-up going into it, but they announced, I think, further back here, somewhere back in April. So it was interesting to see them actually sell off, but it rallied going into the split date, then fell apart, and now is rallying. You have Apple. When's the last time Apple did a split? That was back here in 2020 in August, and you can see here's the date right here. You can tell by the jump up on July 30th. It jumped up on the announcement, and then it rallied for 2 days after it did the split, and then it started to fall apart. So why am I saying all that? Just because I feel like there is this fairly predictable pattern of price behavior with regards to splits. So if Tesla announced a split today, and I'll put a vertical blue line right where the split date is so we can kind of keep track of that one. That vertical blue line, between now and then, anything can happen. If I had to take a wager here, I would be wagering on going long on Tesla just up to the day of that split. Like, I would probably get out what is this? It's the 25th, which is what date? The shares would be split on Thursday, which means I would probably sell on the 24th. I would get out on the 24th just because I don't want to be holding it. And, could it gap up and keep on running? Sure. Could it crash significantly? Absolutely. I just, I'm playing the probabilities here. And maybe to put my money where my mouth is, maybe I'll buy some Tesla here long just until, for the next couple weeks, just to see how it pans out. But history would tell me that Tesla will probably perform better over the next 2.5 weeks until it splits versus performing poorly. So there you go, Tom. That's my thought on the Tesla split. I think it's a better than 50-50 chance that this is going to move up then, simply because of the split and the dynamics of what usually happens for splits. That said, could it go down from here? Absolutely. Right? What's a bigger factor? What's a bigger puller on the market? It's not Tesla itself. The bigger forces are the market itself. So if the S&P starts crashing, well, Tesla's probably going to go down with it, right? So don't put all your eggs in that basket, but buy something for some of you to think about as a short-term swing trade. I'll let you know tomorrow if I actually put a position on here, but I think I might buy some call options on Tesla just for fun. All right. Let's see. Next question comes through. All right, Ed up in San Jose. This is a tricky one. Man, I really am so used to switching back and forth to my video, but I just can't. We're like so appallingly bad today. The flying tomato over here. I was talking about the nano ledgers quite a bit on this program and why I think it's critical for you to store your crypto on those just because you control the private keys. We talked about the seed phrase, right, which is a 12 or 24 word string of characters that you use to keep track of, to access your accounts. And I made the point that if I lose this nano ledger, there we go, I can do this. How about I do this? If I lose my nano ledger, I can't, look how bad that is. God. If I lose my nano ledger, I can still recover it by using a seed phrase. And Ed brought up a very good point. So let me read this one for the podcasters out there since you probably can't read it. It says, you frequently repeat that one should not buy a ledger from anyone but the company that makes them because the 24-word recovery phrase may have been compromised. Today, though, you answered a question I have had. Since it's possible to generate your own phrase and not use the one provided, it seems you can safely get your ledger from anywhere, used or new. Just don't use the seed phrase that you are given. Create your own. In fact, I wouldn't even trust the manufacturer. Shady people could be in the production line. Am I missing something? I agree with you, Ed, especially in that last sentence. I don't trust them either. So let me real quickly show you what we mean here. I'll bring up a seed phrase just so we can look at it on screen and not have to look at the question for the entire show, which is going to get rather boring. Here is a copy of a seed phrase. Let me share it over here. Should be popping up. And there is a copy of a seed phrase, right? So that's 24 words. And Ed, you would, for the most part, you're correct, right? When you look at a seed phrase, it's like, hey, if I just get a ledger, can I just create my own 24 words and put it in there? You can, but it's not that simple. First off, there's 2,048 words that make up the seed phrase universe. So you can't just pick, make up your own words. You can't pick like, your dog's name and hedgehog. Actually, hedgehog looks like it's actually in there. But there's 2,048 words that you must choose. There also is a certain pattern to them, so there isn't repeats. There also is, the first 4 are going to be unique for all of them. So you will never have 2 words that start with N-E-X-T, right? That first phrase. Now, what you could do is you could go through the list of 2,048 seed phrase words, and the first 23, you can pretty much put in what you want. The problem is the 24th word is what's called a checksum, and it's a piece of encryption that basically means that this last word is an output as a result of all the previous 23. So unless you are into encryption, it's not as simple as just picking 24 words. You can't do it. It will say error. You can pick the first 23 words, And then you could actually, if you are a coder or somebody knows programming, you could run them through the encryption protocols and get the right word that would fit for word number 24. And then you could basically put in your own seed phrase. So you can do it, but it's certainly not something for anybody who is a beginner in computer technology or doesn't understand coding. You have to have that checksum as your 24th word, and you don't choose that. The summation of all of these words chooses the 24th word. That's the problem that most people have. So if I wanted to, buy a ledger from let's say I buy it on eBay and it's used, and I'm scared that somebody else has that seed phrase. Correct. I don't want to use that seed phrase. But I could theoretically create my own 23 words and then run it through the encryption protocol and get the 24th word. And now I have my own original encrypted seed phrase. I hope that makes sense to everybody. It is a little confusing, but encrypt your seed phrase with manual algorithm and tattoo it on your foot. You could do that. What happens if you lose your foot, right? I mean, you never know. Not your keys, not your coins. Right, Andrew? Absolutely. So there you go. I know several people asked me about this in the seed phrase, etc. And I'm always saying get it from the source, get it from the original manufacturer. And I agree with you. I don't necessarily trust them either, but I definitely don't trust Amazon, buying things on Amazon. I've already got enough fakes there. How many times have you guys seen Oakleys on Amazon for like $10 a pair? It's like, wait a minute, those are like $150 from Oakley, which means they're getting it from China. They're just great knockoffs. So don't trust it, especially because with an Oakley sunglasses, who cares? It's not money. With a Ledger or a Trezor, there's money on these things, and in some cases a lot. So I think it's really important. Real quick, Tom says Tesla split will kind of mask its price descent to its eventual stock price as an established car company. Bloomberg recently projected Tesla's market share at 11% by 2025. Well, I don't know if it's necessarily going to mask it. There's a huge psychological factor here, which I've noticed this over the years. I'm sure you guys, once I explain it, you probably would understand and shake your head and go, yep, get it. There's a lot of times where people look at a price of something and go, man, $874 for Tesla? That's crazy. That's really expensive. And immediately in our brain, we're thinking that it's expensive. But let's just assume it's $900, right? Well, what's more expensive, $900 or $300? And so if all of a sudden you see Tesla at $300, your brain is going to go, oh, wait a minute, this is really cheap right now. And the truth of the matter is it's no cheaper than it was before, because there's actually going to be, I believe, 4 billion more shares created. So it's kind of like, one of the good examples I saw was, let's say you see a pizza, and the pizza is $8. Okay, it's $8 for this pizza. And you go, oh, well, we're going to do an 8-for-1 split. Okay. Well, let's say I can take that pizza and slice it into 8 pieces. Well, each of the new pieces isn't worth $8. Each of the new pieces is worth $1. It's just those 8 made up the whole pie. Now you're taking one slice out. So they're just creating more shares at a cheaper price. So what will happen is this chart will now get distorted. The price axis will change. And the vast majority of people will look at this and go, wow, it's cheap now. I mean, look at it back here before it did its other splits. You know, when you look at Tesla down here at before the monster move. Well, let's go back to this. This is the big monster move. You know, at $45. Like, oh wow, it was great at $45. Well, this really wasn't $45 back here. That's after it did a 5-for-1 split. So this right here was $200. That's when it did this nice sideways action. So to me, this is a psychological play. It's making it more appealing and easier for people to buy shares of Tesla. Now, ultimately, you know, Tom, you know a lot more about the auto industry than I do, and if it, you know, makes them look like a normal automaker, great. I still think that they have much more growth stock potential than a lot of the other vehicle companies, simply because Tesla's the dominant one at this point. Whether you like their vehicles or Elon Musk or not, they're the dominant one in the space at this moment. There you go. Nobody buy Nvidia dip. Let's check out Nvidia. Yeah, it was a pretty substantial one. And yeah, we'll talk about Kathy Wood in just a second. With regards to this Nvidia dip, obviously had a nice dive today of about 6%. If you look at where it's at right now, it's interesting because you could make the argument that, hey, this is the sideways action and is just about to break out. I'll put a yellow box on here as I like to do, and we'll just look at where it kind of came into. Maybe go slightly higher. But you could argue that that's really kind of been consolidation for a little bit. It hasn't made a new low since July 5th, which is critical. But the market hasn't either. So we're making higher highs, higher lows. Great. But Brendan went long on it today. Cool. I probably personally would have waited a little bit longer. Maybe if it got down to 167. I don't see anything from a supply-demand perspective that would cause me to buy this. So it's either I'm waiting for a pullback in an area of demand or I'm going to wait for the breakup. That's one of my two. I heard Mr. Wonderful got some Nvidia today. Maybe. Who knows? I don't trust any of those guys. Mark Cuban, Mr. Wonderful, Diamond, they're using the media to disseminate information that benefits them. Always remember that. So, technically right now on this chart time frame, Nvidia is just starting to look good. We really needed to break above that 200 mark. Once it gets above 200, then all of a sudden I think you got some big leg room to the upside, but still looks challenged at this moment for me. I would probably wait a little bit longer for the dip, but for you, Brendan, I hope it rips to the upside. All right, what else did I have here? Okay, man, I'm so used to going back to my video. As you guys know, there's always different strategies out there in the marketplace. There's hundreds of them. And this is one that Michael was referencing, and there's certainly a bunch of strategies in OTA's content, and everybody's content that teaches has some strategy that they hang their hat on. He says, here's one, for example, when the ES is above or below the 12-period moving average for 2 weeks, this is a significant milestone. Buy or sell signal. The ES is now above the average for 3 weeks, giving it a buy signal a week ago. What are your thoughts on this indicator? Well, first off, I believe that this type of an indicator is lagging, right? You use moving averages, it's a lagging indicator. I don't think anybody can refute that. It's a result of historical information. So let me change this real quick to a 12-period moving average so we can get that analysis on here. Okay, and you want it on a weekly. So we'll throw that on a weekly time frame. I'll bring up the S&P, and here's your ES. Right, so you've got 1, 2, and this is our third. Well, actually, technically, this is our going on our 4th week of being above it. While I like the strategy because I think it is important to follow the trend, you're just getting now a curl up here. You guys can see on the weekly that blue moving average line is just starting to hook to the upside. So sure, that could have been an entry long. Why not? All right. In my opinion, I have to look at what's more important. And the more important piece to me is the trend of price itself at this moment. And that is the peak that we saw here on January 3rd on a weekly. It peaked again, but lower on March 28th. It peaked again, but much lower on May 31st. And now it's challenging those May 31st peaks. It still, in my opinion, is in a downtrend since the beginning of the year. So even though this moving average is curling, it's just simply saying that over the past 3 weeks, it's shown significant strength. Well, yeah. And if it gets above and starts to get above, let's say 4,200, then I would agree that's your buy time. On the breakout. Right now, what is it telling you to do? Based off that strategy, Michael, you got to ask yourself, what is it telling me to do? It's telling you to buy right now, right? And if you buy right now, you're buying at a supply zone. And to me, that's a problem. If you're buying at supply zones, the supply zones are generally there because things are going to go the opposite direction. And no, I did not cover my SPY short, Margaret. Not yet. Not until we break above. Not until we break above that yellow box. So while I do like it, Michael, I like using things like moving averages to be a support system. For me, I have to look at it as number one most important thing right now is the trend, and that is, at least for the intermediate term, is down. I'm at supply, so probability, in my opinion, is better to short the supply zone and play that downside move. Now, if I'm wrong, fine. I will buy the breakout above this yellow box. I'll reverse my position and go long, right? But that's as simple as I can make it. Putting your full faith in an indicator to me is a fool's errand, right? They can be very late to the party. So, for example, if I take off this moving average, right? Let's just hide that moving average, and I go back to here. I think everybody can make the statement that, well, it looks like it's stabilizing and getting a little bit stronger, right? You're starting to see this little green candle that formed on July 18th move to the upside. And then all of a sudden the next day, okay, yeah. You don't need a moving average to tell you that these things are curling up. It's sentiment. It's very clear that sentiment is changing. Now what's interesting is that we have these 2 weeks worth of consolidation just going sideways. Of course, it's Monday, so this is a new one. We'll have to wait and see what happens there. SPY, and this is part of the challenge of these bad boys. To me, it didn't break above it, it's right at it, right? So if I go to the top of this is a weekly. Let me do a snap here for you. It should be right there. Let me just real quick make sure. The high on May 31st, the week of May 31st was 417.44, and it's pretty much on that one. Okay, so to me, that's where I would have that overhead supply zone. And I'll put on your daily. So we hit it today, right? Right dead on, but we didn't break it, in my opinion. I don't see it breaking, but it hit it today. So you get above 420, I'm out. But it's got to get above 420 for me. Nothing breaks 420. Anyway, so that's my take on indicators, especially a moving average strategy, very lagging. But let's be honest, you don't need that indicator to tell you what to do. Give me any other market. That's one I don't normally look at. Let's go to corn. Okay, I don't need to put a moving average on here because I know what it's going to say. It's going to tell me it's just traversing sideways, right? Let's go back to the weekly since you were using that as a weekly reference. Sorry. Put on the weekly here. Okay, let's pick, how about natural gas? All right, this one's actually going to be rather tricky because you have this 6-week window where it had an aggressive sell-off and a huge retracement. It's going to completely mess up the indicators. It makes it kind of difficult to look at. So that one will be a clear example. Find something that's easy. Like these ones, Here is copper futures on the weekly. Now, obviously today, decent day, up 1.01%, fine. Well, what would your indicators be doing? Your indicators would not be turned yet. Your indicator for, if you're going to do that moving average on the 12-week moving average, it's going to start to flatten out and maybe just barely start to curl. But my guess is it's actually going to start pointing down a little bit, if not just sideways. Yeah, so still pointed down. We get another up day here, it'll start to curl. And the reason is it's taking in these red candles. And these red candles are skewing the data and making it not turned yet. Even though we've had 3 out of the last 4 weeks have been positive. But I don't need my indicator to help me out here. I'm just looking at that price decline. Merlin, check out how the 521 EMA cross and 200. Well, I mean, that's the same thing. But, I mean, if you do a 521, again, you're using a lagging crossover system, and all it's really designed to do. I can't add on another one. Let me see if I can add it on for you, Brendan. Go indicator. I already got that one. You want EMAs? I think you're using EMAs. Is that what you just said there? Yeah, I use EMAs. All right, so let me go add on 2 exponential moving averages here. For those who don't know, there's really 2 main types of moving averages. There's the exponential, and there is a... One second, I'm trying to delete all this and do it at the same time. Okay, got my ATR. There's an exponential and there's just a simple moving average. And what it is it weights them. So you have, on a simple moving average, each of the bars being calculated has the same weighting. Whereas when you look at an exponential, it puts much more emphasis on the most recent data. So I will add on here, use the 5. And by the way, I do not use any crossover systems. I know a lot of people that do. And let's get that 21 on here. Oops. All right. And when you look at your red light, green light system, some of you may have seen these red light, green light systems. Let me get that off there. All they're really doing is saying when these cross, I'm going to use that as a buy and sell signal, right? So, for example, right here, let's color code these so they look a little bit better. Great. I'm colorblind, and this is gonna make me. I was gonna try to make it look real easy. Anyway, they're both the same color. When this the faster one crosses below the slower one, that's giving you a sell signal. So it basically gave you a sell signal here on April 25th. Now, what's interesting is a lot of people think April 25th would be the day that you would have gone short, or the week of April 25th was when you would have gone short copper. That's not the case. These lines would not have crossed until this candle is formed, which means you would have to wait till this candle here. Now, that said, you would have gone short on May 2nd because it now gave you a sell signal based off this 521 moving average crossover. That was your sell. Well, it rallied back up and most likely stopped you out right here with copper before continuing on and doing its trend. Unless you're going to wait for the moving averages to cross themselves. Now, I think you were referencing, Brendan, the S&P. So we'll just go look at the major indexes. if you're using a 521, the 5 is just about to cross above the 21 period exponential moving average. You can see that over here on the hard red edge, right? It's moving up closer. That theoretically could give you a buy signal. And again, if it breaks above 420 and we get a crossover, now you have multiple signals giving you confirmation on that breakout. So this obviously paints a weaker picture for my argument of going short at supply. But with trading, it's you guys all know this very well. You could all of a sudden create arguments. I could give you guys, give me $100 and convince me that S&P is going down. And then 10 seconds later, I can say, okay, here's another $100, convince me that it's going to be going up, right? You can find arguments for either direction. And right now, I think it's a turning point for the markets. I've got overhead supply coming into, but it's building strength. It's getting more positive action. We're seeing commodity prices fall. There's a lot of different things happening right now, which, again, could make arguments either way. Bottom line is I have trades on short at this moment, and if I'm wrong, once it breaks 420 on SPY, I'll close that position out, and I'll probably open up long positions, expecting it to get up to 460 or 455 on the SPY. There we go. People are looking at NQ and breaking the channel. It's on the daily, weekly. There are multiple supply zones just above. Yes. And Drew, that's the beauty of it. If you look at the NQ, where's my NQ? This is a weekly, which, I've got that. I like my lines better. Just draw me a simple trend line. But using Brendan's idea, look, we haven't even broken the 5 above the 21, but we already broke out of this pattern. So to me, it's coming right back up to this other area, which is 13.5. That's your next turning point, which is critical for the NQ. Now, as far as breaking its channel, let me get these moving averages off here since they bother me and make me stare at them, and I don't like them. You could make the argument we are in a channel, right? We have been trending up since these lows back on June 15th, but what's most important is it's just a series of higher highs, higher lows. We've broken out. My guess is, by the way the candle ended today, we'll have a retracement back down to, let's say, 12,900, somewhere in there, 12,950. And then, if it is in fact strong, we'll see it challenge that 13.5. But that's, I'm not an oracle. I'm just basically looking at price, saying price has done what over the past couple of months? Okay, therefore it's more likely to continue doing that until it changes. So there you go. So Michael, I hope I answered your question there with the moving average piece. I like it as a support system, right? It's kind of like saying, do I like crutches because they help you walk on a gimpy leg? Yes, I think they're great, but you can't be dependent on those crutches or you'll never heal. The downtrend channel. That's tough. If you're going, I think what you're talking about, Drew, is this one here, going through these peaks, right? And now we start to just get a lot of points where confluence, right? Now you're on this nice little downtrend. Yeah, I see what you're talking about. You have your first point, second point confirmation. It actually tapped at a third point, and now we're at it right now. That's one other reason why you might be thinking bearish. But look, I know Brendan is very bullish and long, and that's great. And I'm not very bearish. I am slightly bearish at this moment. But look, I have no worries to change my opinion, flip, and all of a sudden be going long here. I just feel like there's just too much macro stuff pushing the markets down. We're getting a nice little bear market rally, in my opinion. But hey, I'm happy to be wrong. It's not going to cost me a lot of money. Oh, thank you. I'm having a horrible day, guys. I look sunburnt. My video doesn't work. I didn't start the show on time. My goodness, what a day. There you go, Drew. That's your picture. So there's your third point of contact. And to me, again, a potential shorting opportunity because you really came up to supply today, hits that downward trend line, etc. Let's see. So many charts look the same right now. Yep, absolutely. Powell go Burr and Larry going to make it. I don't know how Powell can. I don't know how Powell can make the money machine go back on again if inflation is there. So let me real quickly add to it with this question here. And Drew, I promise I will stay on top of the switching. Lee, great question. He says, how high do you think the Fed will raise rates? What will be the deciding factor? Now, nobody knows exactly how high rates are going to go. I think the only thing we can do is look at historical information to find out, what are the expectations and what have central banks done historically to fight it. What we can do is look over here. I'm actually, Margaret, I am going to have a nice smoothie right after I finish this show. if you look here, this is for the September meeting. And right now, there's a 63% chance that we're going to get a 75 basis point increase. I personally don't believe that's going to happen. I think it's going to be 50. I'm in the minority right now at 36.5%. The reason for that, I'll show you why in just a sec. Here's what we have for till the end of the year. Right? So right now we're at 250. They're expecting another 1.25% increase. That's the highest probability by December. Well, there's only 3 meetings left. So in 3 meetings, we have to have 5 quarter point rate increases. Now, who knows whether that'll happen in 1 meeting, 2 meetings, or 3 meetings. Now, to Lee's question, which is a great question, is, well, how high do you think that they will raise? I'll answer that question in the exactly correct manner. Yeah, right, Tom says, if there is inflation. This is the 100% correct answer. No one can argue this. The Fed will raise rates as high as they feel they need to raise to fight inflation. There you go. I cannot be wrong with that one. However, take a peek at this chart. This is actually from the Federal Reserve, and it goes back to the 1950s. In red is the Consumer Price Index, which is basically CPI. Right now, our CPI is at 9.1. You can see that spiking on the right-hand side of your screen. The blue line, or purplish line, is the Fed funds futures rate. And what I think is very interesting here, and this just kind of has me scratching my head again, is there's almost no point in history, at least on this chart, where the Fed funds rate was not ahead of inflation. You can see back here in the 60s, right? I'll use the pen here. See back here in the 60s, right? That blue line was well above the CPI numbers. Same thing back here. It actually started to surge back in the 80s, but Fed raised the rate so quickly, Volcker jacked those things up exponentially to make sure that the Fed funds rate was above the rate of inflation. Now back here in 2000, we saw inflation higher. What did the Fed do? Boom, they ripped rates up to get higher than inflation. And now we've been just stuck. This is the part that screwed us right here. This red circle, that screwed us. When we bottomed out in 2009, the Fed kept rates at 0. Yet inflation was higher than that. That starts to hurt. And then all of a sudden you had an inverted yield curve, right? Went negative with CPI. And right now on this hard red edge, you get your Fed funds at 2.5 and CPI at 9.1. So there's only one of two things can happen here. Either the Fed aggressively raises rates to get above this 9.1, which would be insane. Could you imagine the next meeting, like, we got to get above 9.1. We're going to raise 7%. Not going to happen. But at some point, this picture needs to go back to what has normally been working. Yeah, there won't be a Volcker. I agree, Brendan. Unfortunately, there won't. So on the one of two things is going to happen. Either CPI is going to collapse aggressively, which I actually think it's going to. I think CPI will start to decline. As I mentioned, I think you get into October CPI data. I think will really start to reflect some of the commodities we've talked about. Or the Fed has to keep raising and accommodate for that and keep moving up. I don't think you're going to see the CPI number magically fall to 2.5%. So the Fed's got to keep popping and keep popping. If we go to the futures traders, who are the ones that are putting their money on the line, let's just go look as far out as I can get here. This is 1 year out, July. July of next year, the expectation is that we're only going to be at 3.5%. So really what that means, it's actually painting a pretty calm picture. It means that if the rates jump 1%, that's pretty much done. And 75 basis points are expected at the next meeting, which means over the course of the next year, we're going to get one more 25 basis point increase. To me, I don't know if I buy that. I don't think we're done with it yet. I have a feeling you will see these numbers increase for July's meeting, which is July 26th of 2023. So to answer your question, how high will they raise rates? However high they need to raise them. Right, they're going to raise those rates incrementally, hopefully get to a point where they can moderate inflation and feel comfortable about where they're at. What number is that? Not sure. Right, I don't know exactly where that number is. Hope that helps. I know it's not the answer you're looking for. I don't know what they're going to do with regards to rates. My guess is they will raise as needed, but it's really going to be data dependent, and we'll see what happens with CPI. We have 2 numbers coming out this week, Wednesday and Thursday. We've got CPI. It's going to be an interesting one. Let's go to my last one, and I'll answer some questions that come through here in the chat. This is from Linda, who is a regular on the program, and I wanted to make sure I got to you. Since Voyager is temporarily out of business, can you suggest another crypto broker, please? Linda, it really depends on what you want to do. If you want to store your cryptocurrency and just hold it, then move it over to a ledger. Get it off an exchange. Get it away from any exchange. If you absolutely must have it on a crypto exchange, I would probably say go to Kraken. But that's just me. I think Coinbase, it just seems a little sketchy, especially since they put that statement in their financials about bankruptcy proceedings and your assets being part of their bankruptcy funds. That doesn't sound good. If you're looking to earn yield, then you got to shop around and find out who's going to give you the rates that you want. Right now, I pulled almost all my money off of lending protocols just because I don't trust them right now. There's another one just went out, Haru Invest, which is a big one a lot of people were talking about. They are not doing so well. They just shut down their system today. They're Singapore, right? They're offering great rates and they're frozen. So if you're looking to lend out your crypto, I would hold off for a few months just to wait and see what happens. Now, if you're going to be staking, well, then you move it to who's going to give you the best staking rates, right? I'm not concerned about staking. It's the lending side of crypto that has me concerned right now at this point, Linda. All right. Andrews, it's a virtual mathematical impossibility that the Fed can raise rate about CPI this time. Yeah, totally. It's not impossible, Andrew. It'd just be insane. It would be a stupid move for the Fed to raise 7% to get above 9.1. Plus, I think the general consensus is that inflation is going to decline a little bit. So what they'll do is keep incrementally moving their rates up today, and I think it's going to be a long time before we get to see the Fed funds above the rate of inflation. Let's see. Jay Patel wants to know about BBBY. Bed Bath & Beyond. Soared 50% today. Is this a new short squeeze candidate? It may have been. I don't know. I don't follow Bed Bath & Beyond. My guess is it probably was. One way you can find out is you can go here and go to like Yahoo and just look at the short interest. There's some sites that will specifically focus on short interest, but I'll just go to Yahoo, which is an easy one, and it'll give you an idea. Now, it's going to be somewhat lagging, but you should see some pretty high numbers under the statistics page that shows you the short interest, which is right now, percentage shares short. Yeah, this is a short squeeze, absolutely. Short as a percent of float, it's 101% short right now, which honestly should be illegal. Like, you should never be able to short more shares than are available. It just doesn't make any sense. So yeah, this is absolutely, I'm sure it's a Reddit Wall Street Bets pump thing. Let's be honest. How many of you think that Bed Bath & Beyond is going to have a resurgence, become a dominant retailer of pillows and home goods? Probably not. I'm going to say negative, Ghost Rider. I'm thinking they're going under. Paralysis by analysis. I'm putting all my money into Meta. Don't at me. Middle. I wouldn't do that, my friend. Don't put everything into one stock, ever. Right? Even if you think it's the greatest company in the world, spread it around a little bit, man. And if anything, use ETFs to help spread that risk around. Putting it all in one, that's just opening up your risk exposure significantly. I'm not mad at you. It's your money. You can do whatever you want. I'm just trying to help out, being a voice of reason. Look, everybody wants to make money. Everybody wants to make money, and lots of it. The key is you can make a lot of money in 1 week and then lose it all over the next couple months. The real trick is to consistently earn an income and grow your wealth over the rest of your life. That is a way different approach. Andrew says Binance has 0% Bitcoin trading fees, dollar cost averaging on Binance and send a ledger. Correct. So again, for Linda, who's talking about crypto, if you're going to be buying a lot, then Binance actually has some of the best rates for transactions and ACH. Kraken has issues with their ACH. Coinbase, you can ACH from your checking account, but it's expensive, right? There you go. Let's see. So let me go over here real quick just so I can bring up more questions for the viewers at home. Kathy Wood, lovely Kathy Wood. I'm sure you guys all love Kathy Wood. She basically says we are in a recession. Now, I don't know how many people believe that, but Kathy Wood said it, and Karen says, Kathy Wood says we're in a recession. It's official. Look, I guess I got to play cynical. Like, I don't care if we're in a recession or not. Bottom line is, it's just what the charts tell me. If we can look at the economic data and it paints a negative picture for our market going forward, then that would increase the probability of more bearishness, which means I can position my long-term portfolio short while still being ambivalent to direction in the short term. Okay? Oh, waiting for the unload. Oh, why would you buy Best Buy? Or Bed Bath & Beyond, sorry. TransUnion, NJ? I don't know. I don't know. Oh, yeah, I saw it's funny, for anybody who's looking at statements like this from Kathy Wood, who, became an icon, and saying that we're in a recession, you got to question her market timing, right? Because when did she's just dumped all of her Coinbase, too. So she dumped it after it fell, 60, 70%. And now she's, calling recession. So I don't really trust their timing. Brennan says, Kathy Wood making a bear call equals a bull sign. Yeah, exactly, right? It's kind of going the opposite direction. TRU, let me look at TRU real quick for you. TransUnion. Technically, I mean, it's funny. When I say I don't like it, it doesn't... It's so weird. I guess it depends on the direction. At this point, look, this thing looks bearish. TransUnion looking just lower highs, lower lows. To me, it looks like this gap wants to close right around 87.50. So if you're long at 80, I would be playing that gap fill. There's really one more milestone before you start to see that gap fill quickly, and that's the candle that was on the day of the gap. And that high, let me show you what the high number was so you guys can see that visually here. That high right there was 81.04. So I would be okay with this as long as I had a tight stop loss. It says once we get above 81.04, then I'm anticipating it closing this gap, right? Almost all gaps fill at some point. So I don't like the chart. It just looks like something's wrong with TransUnion and just tanking. But I do like the potential gap fill here. And if it got up to 88, I would get out of my long position and potentially look at shorting it, period. There you go. There's your TransUnion. Man, ugly one. Kathy Wood should share her losses. The average recession lasts 8 months. The recession deniers need only deny for about 6 weeks on average. Well, everybody can deny everything to some extent. Let me do this. Ooh, you know what? This will work for me, I think. Now, I was going to try to show my main screen. Anyway, I have to show you what's happening for tomorrow, and then we'll wrap things up. There are a couple of earnings announcements and economic pieces, so let me dive into that real quick, and then I'll wrap things up, and then I'll work on fixing my tomato camera. Jesus. Here you can see for the U.S., not a lot happening tomorrow. You have IBD tip economic optimism numbers, which is probably the more important piece there. You also have labor costs and non-farm productivity, but not a lot of really big deals tomorrow. At 3 in the morning, which is an odd time, you have the NFIB Small Business Index. Normally that comes out 1 hour before market opens. This time it's 3.5 hours before, which I don't understand why that is. And then you see some PPI numbers for China and Japan, but I usually don't look at Chinese data because I just don't trust it. So that's it from the economic calendar for tomorrow. And here is your earnings for tomorrow. Now, don't just scratch Cronus off. Cronus they always put themselves on the list, and they just seems like week after week they just delay and delay and delay. But given what happened with some of the other cannabis companies, it's probably not going to be good for Cronus Group. You got the Trade Desk, you've got Wynn Resorts, Spirit Airlines, Planet Fitness, and Akamai Technology reporting earnings tomorrow as well, and that will wrap up the calendar. On a somewhat solemn note, sad to see Blondie pass away today. Or sorry, Olivia Newton-John pass away today. Yeah, more bad deaths. Get Bill Russell, Olivia Newton-John. Anyway, you guys have questions, comments, feedback, you see on the screen here, since I'm not going to show my ugly mug again today. You can email me at TraderMerlin@gmail.com is the easy way, or just put things down below the YouTube video. A lot of you have been putting comments and questions and feedback down there, which is great. Keep doing that, and I will get to all those questions on tomorrow's show. Now, for tomorrow, my guest is going to be Jerry Baldwin. We're going to talk about futures. He's got some exciting news he wants to talk about, so we'll talk about that at the end of the program. But we'll look at the futures markets. If there's something that you want to talk about, let me know. Send them on in, and we will discuss that with Jerry Baldwin Futures tomorrow. Thank you, everybody, for dealing with me and my imperfections and inability to run an effective show today. I will see you all tomorrow. Take care.